Acquiring a business? BizNexus simplifies it. Access thousands of updated opportunities in our DIY marketplace or supercharge team sourcing with OmniSource, your all-in-one platform for on-market, off-market, and coming-soon deals. Scale smarter today. Learn more or book a demo at www.biznexus.com.
Disclaimer from the always present legal team. Podcast conversations don't necessarily reflect the views of BizNexus Incorporated. Everything you hear is informational news and updates from around the industry. We're not recommending any investments. We're not offering any investment advice. Be sure to do your own homework.
All right, so the economy, right? It's been a little crazy lately.
Yeah.
1 minute, it's all doom and gloom, and then the next minute, everyone's talking about this soft landing. So what give? Are we going to crash, or are things actually looking up?
Yeah.
Today, we're going to try to figure that out.
Good question.
We're doing a deep dive on Vanguard's 2025 economic outlook.
Oh, cool.
It's called Beyond the Landing, and it just came out like a couple of days ago.
Wow. So this is hot off the presses.
Like November 25th, I think.
Okay.
So brand new, and they're making some pretty bold predictions. So we got to dive into this.
Yeah, for sure.
I think the big question on everybody's mind is everyone's talking about a soft landing for the U.S. economy.
Right.
But is that the whole story?
Yeah. And, they are really challenging that kind of conventional narrative.
Oh, really?
That we always hear about the Fed engineering a soft landing.
Right. And I think everybody keeps saying that the Fed's going to pull it off. It just seems like if you look around, things are kind of weird.
Yeah.
I mean, we have growth, which is good. Inflation seems to be cooling down a bit, but interest rates are still really high.
Yeah, they are.
Like, if the Fed is engineering this soft landing, why are interest rates still so high?
Well, that's exactly right. It doesn't really add up if you think about it conventionally.
Right.
And so what Vanguard is saying is actually really fascinating. They are arguing that this isn't about the Fed at all. This is about a supply-side surge that's been kind of happening under the radar.
Okay, supply-side surge.
Yeah.
That sounds like something out of like an economics textbook.
Yeah, it does.
So can you break that down for me and for everyone listening?
Yeah.
Like, explain it to me like I'm 5.
Okay, so imagine the economy is like a giant engine, right?
Okay.
So we've been talking about the gas pedal for years now.
Okay.
Demand side stuff like spending and stimulus.
Right.
But Vanguard's saying, well, hey, what about the engine itself? What about all those other things that actually make the economy run? And what they're seeing is actually a boost in labor productivity.
Okay.
And get this, a surge in the available workforce.
Wait a second. A surge in the workforce.
Yeah.
But haven't we been hearing about labor shortages like forever?
Right. That's why it's kind of shocking. But it turns out there are a few different things that have been happening. Increased immigration. People are coming back into the workforce after the pandemic.
Okay.
Even some folks who took early retirement during COVID are deciding to come back.
Oh, wow. Interesting.
So it's this really complex kind of demographic puzzle. But the result is basically a bigger pool of workers than anyone was expecting.
So we've got this unexpected engine upgrade happening.
Yes.
What does that mean for the U.S. economy going forward?
Well, Vanguard's not saying it's going to be a boom or anything, but they do see continued growth in 2025.
Okay.
But it might slow down to around 2%.
Okay.
And there are some risks on the horizon.
Warning signs.
Well, potential risks. They are saying that there's a possibility of trade tariffs and stricter immigration policies, possibly.
No.
And so those are potential risks. It's not happening now.
Okay.
But it's something to keep an eye on because it could definitely change things.
Got it.
Yeah.
So growth might slow down, and we got these potential risks.
Right.
What about inflation? What's happening with that?
Yeah. So the good news is that inflation is cooling down.
Okay.
But the report suggests that core inflation is probably going to stay above 2.5% for most of 2025.
So it's still kind of sticky then.
Yeah, it is.
So the Fed's probably not celebrating just yet.
No.
They're not popping the champagne.
No.
Okay, so they're predicting that the Fed will cut rates, though.
They are.
But only to around 4%.
Yeah, right. Around there.
So they still have to walk this tightrope
They do.
between supporting growth and keeping inflation under control.
Exactly.
All right, so it's a bit of a mixed bag for the U.S. We have this good supply-side surprise happening.
Yeah.
But how does all of this compare to what's going on in other economies around the world.
Well, it seems like the U.S. might be in a relatively good spot, at least for now.
Okay.
Let's look at the euro area.
Okay.
They've managed to get inflation near their target, but it's come at the cost of basically economic stagnation.
Oh, stagnation. That doesn't sound good.
No, it's not.
What's going on over there?
Well, a few things. They've had weak productivity growth for a while now, and the energy crisis has really hit them hard.
Right.
External demand has also been pretty muted.
Oh, wow.
So all in all, yeah, not a great picture.
Yeah.
And because of all that, Vanguard expects the European Central Bank to actually cut rates even more to try to get things moving.
Oh, wow.
Yeah.
So Europe's kind of stuck in the slow lane then.
Yeah, kind of.
What about China?
Right.
They've been a powerhouse for a while.
They have.
What's their outlook?
So they are expecting China's growth to pick up a bit in 2025.
Okay.
But they're pretty clear that China needs to take more action,
Oh, really?
like policy action, to really get things going.
Hmm.
And they're actually a bit more pessimistic about China's long-term growth potential.
Oh, interesting. So they're saying don't believe the hype.
Yeah, basically.
Yeah.
They're more pessimistic than a lot of other analysts, which is interesting.
Yeah.
Yeah.
All right. So we have the U.S. doing relatively okay, but we got those speed bumps ahead. Europe stuck in neutral, and China has its own set of challenges.
Right.
So big picture, what does this all mean for investors?
Yeah, that's the question, isn't it?
Like, what should we be doing with our money?
Well, this is where Vanguard drops another kind of bombshell.
Oh, boy.
They think the sound money era is here to stay.
Sound money era. Okay, you're going to have to explain that one, too.
I will.
That sounds like something out of a pirate movie.
It does, doesn't it? But think about it this way. It means that central banks are finally getting serious about keeping inflation under control, even if it means slower economic growth in the short term. So it's a big shift from those easy money days we had for like the past decade.
Right.
Yeah.
So if interest rates are probably going to stay higher for longer, how should people be thinking about their portfolios?
Yeah, well, it definitely means that you need to adjust some things.
Okay.
One of the big takeaways is that fixed income or bonds, as most people know them, they're making a comeback.
Really?
For years, they offered pretty dismal returns.
Right.
But now with these higher interest rates, they're suddenly looking a lot more attractive.
So bonds aren't so boring anymore.
Not anymore, no.
What about stocks?
Stocks definitely still have a place
Okay.
in a diversified portfolio,
Oh.
but you have to be more careful
Okay.
and really focus on companies that have good fundamentals
Right.
and that can still make money in this higher interest rate world.
So it's all about adapting to this new reality.
Yeah.
It sounds like those easy money days are over. And we need to be smarter about how we invest.
Exactly.
So what else should investors keep in mind as they try to figure all this out?
That's a great question, and it leads us perfectly into the next part of our deep dive.
Oh, okay.
Yeah.
All right. Well, let's take a quick break then, and we'll come back and
It's good.
keep talking about it.
All right. One of the big things investors should be thinking about is looking at the economy and the markets from a supply side perspective. We've been focused on demand side factors for so long, consumer spending, government stimulus.
Right.
But like we were talking about, Vanguard's analysis is showing that supply side forces, like productivity growth and how many workers are available, can have a huge impact on the economy.
That's a good point, because it seems like a lot of the financial news I read is just obsessed with interest rates and inflation.
Yeah.
But you're saying we need to look deeper.
Exactly. We need to understand what's driving those trends in the first place.
Right.
And when we understand that, then we can make better decisions about, how to invest our money.
Right.
And be prepared for the future.
Okay, so if we use that supply side lens, then what stands out to you? Like, are there any opportunities or maybe some red flags that investors should be aware of?
Well, when we look at the U.S., Vanguard is making this really interesting comparison to 1999.
Whoa, 1999.
Yeah.
That's taking me back.
Back in the day.
Dial-up internet.
Oh, yeah.
.com bubble.
Exactly.
What are they getting at with that comparison?
Well, it's all about valuations. Back then we saw this incredible tech boom.
Right.
Valuations were going through the roof. Everyone was so excited, and it felt like it was never going to end.
Yeah, and then, of course, we had the .com crash.
Exactly.
Which was not a good time.
No.
So is Vanguard saying that we're in another bubble?
Not necessarily, but they are raising the question of, is this recent stock market rally based on solid fundamentals, or are we seeing kind of another wave of irrational exuberance? are we pricing in future growth accurately?
Yeah.
Or are we setting ourselves up for a correction?
Man, that is a really thought-provoking question.
Yeah,
Because it does feel like the market has been on a tear lately.
it has.
It's easy to get caught up in the excitement.
Yeah, it is.
But you're right, we need to step back
Mm.
and look at the bigger picture.
Absolutely. We can't just get swept up in the momentum.
Right.
We have to ask ourselves,
Mm-hmm.
is this sustainable? Are these valuations justified?
Right.
It's all about balancing risk and reward.
I agree.
Yeah.
So if Vanguard is a bit cautious on U.S. stocks, then what about international markets? Are those looking better?
They actually do see international valuations as more attractive right now.
Oh, really? Why is that?
Well, partly because those economies, they're probably going to be more exposed to those global risks that we talked about before,
Right.
like those trade tariffs and the immigration restrictions.
Right.
So because of that risk, their valuations haven't really gone up as much as in the U.S.
With higher risk, but also potentially higher reward.
Potentially, yeah.
Yeah.
But, international markets come with their own challenges,
Yeah.
like currency fluctuations and geopolitical instability.
Right.
So it's not for the faint of heart.
It's not as easy.
It's not easy, no.
You got to do your research.
You do, you really do.
Understand the risks.
Yeah.
Okay, so we've covered a lot here.
We have.
U.S., Europe, China, stocks, bonds, sound money era.
That's a lot.
It's a lot to digest.
Yeah.
I feel like we need a nap after this.
Yeah.
But if you had to just boil it all down to one key takeaway for listeners, what would it be?
I think the most important thing is to think long-term and focus on the fundamentals.
When you say fundamentals, what do you mean?
Things like earnings growth, dividends, the company's overall financial health.
Okay.
Don't just get caught up in the hype or the short-term noise.
Right.
Focus on building a diversified portfolio of solid companies that can weather any storms and deliver good returns over time.
Yeah, that's good advice. It's easy to get distracted by the headlines. Focusing on the long term just seems like a much smarter strategy.
It really is.
Okay, so before we wrap up, I know you have one final question.
I do.
A thought-provoking question for our listeners to really ponder.
Yeah.
So lay it on us. What is it?
All right. So we've been talking about this sound money era and how it's changing things for investors. And, we talked about how the U.S. market might be kind of in a similar spot to 1999.
Yeah, with those valuations?
Yeah, and whether those valuations are maybe a little bit out of whack.
Right.
So the question I want to leave you with is,
Okay.
are we being rational or are we getting caught up in all the excitement again? Are we in a new era of growth that justifies these valuations? Or is this all going to come crashing down?
That's a tough one. It's like you're asking us to predict the future.
Yeah, it is a question only time will tell.
Right.
But it's something that every investor should be thinking about.
For sure. I mean, we can't just ignore it.
No.
So how do we even approach that?
I think you have to approach it with a healthy dose of skepticism.
Okay.
Don't just follow the crowd.
Right.
Do your own research. Look at the fundamentals.
Yeah.
And be prepared that things might not go as smoothly as everyone's hoping.
That's good life advice in general.
It is.
Okay. So as we wrap up this deep dive,
Yeah.
I feel like we've only just scratched the surface.
Yeah.
This is a complex topic.
It is. There's so much to think about.
So many factors.
Exactly.
But I feel like I have a much better understanding of the big picture now.
Good.
The risks, the opportunities,
Yeah.
and what I should be asking myself as an investor.
That's great.
And I hope our listeners feel the same way.
Yeah, me too. And, even though the future is uncertain,
Right.
we can still make good decisions.
Right.
If we stay informed, stay curious, and, stay focused on those long-term goals.
Yeah, absolutely. Well, that's a perfect note to end on. Thank you so much for joining us today and sharing all your insights.
It was my pleasure.
And to our listeners, thanks for diving deep with us.
Yeah.
Keep those questions coming. And, the best way to navigate all this is to stay informed, stay curious, and, as always, happy investing.